Welcome back, everyone, to Lamb's Cryptoverse. Today is part one of our three-part series on production cost. Of course, that's for Bitcoin. And what I'm trying to do here in this long project, I spent a few weeks trying to figure this out, is how do we figure out a floor price for Bitcoin? Well, I figured out that it's like energy, right? If you're looking at energy, like energy companies, there's a way of figuring out what the bottom is in energy prices and in energy stocks by figuring out what the all-in sustaining break-even cost is for oil. You can do the same thing. It's not exactly, but you can do an analog for Bitcoin. So I made this presentation for you to go back. It's more like a PowerPoint presentation, so you can go back, look at it, and spend more time because I'm going to go through it quickly. And you may have to, go back to revisit what I'm saying. So let's get started. First of all, before we even continue, there's two ways of looking at things. There's a top-down and the bottom-up. The top-down is a bird's eye view, right? That's like looking at the forest rather than the trees. These people tend to be more reliant on technical analysis and on stock charts, or in this case, crypto charts. And then there's a bottoms-up way of looking at things, right? You can look at individual grains of data and then put them all together, right? You see that with a company called IBES, right? This is a company that looks at earnings estimates for publicly traded companies. You can look at them top-down, right, from strategists from JP Morgan and Goldman Sachs, or you can collect the individual earnings estimates for each company and then put them together. That's bottoms up. So these people, their personality types tend to be more detail oriented. What I like to do is to do both. I like to look at stock charts, crypto charts, but I also like to look at bottoms up data because I think that's when you get the best analysis. So let's get started. So this presentation's, as you know, part one is going to be top down. So next slide. Minor revenue. Minor revenue includes production cost. I'm sorry, not production cost. Includes revenue from these Bitcoin producers, the mining rigs. And not just revenue from newly minted coins, but it also includes fees. And those fees are small anyway. So it's really mostly minted coins. But you can see that minor revenue has declined dramatically from the highs that we saw in 2021. But still, this data, this chart's not telling you enough. It's not telling you if we're at a bottom. So that's why you need to look at other charts. Let's go to the next slide. Fees paid to miners. And these are just fees. And this chart here, it doesn't tell you enough. It's gone down a lot from 2021. But it's been at these levels for many times, so it's not telling you enough. It's telling you that, hey, we might be at a bear market bottom, but maybe not. Difficulty ribbon. This is the number of hashes required to mine a block. And the difficulty ribbon is something that became really popular with Willy Wool, with his subscribers. And it frankly looks nice, but you don't really need to have this. But basically, the difficulty ribbon turns more bullish when you get declines in the shorter term ribbons, as they say, versus the longer term ribbons. So the shorter term ribbons you can see here in this chart are the 9-day ribbons, the 14-day ribbons. Those are the blue. When those ribbons, when those colors decline below the longer term ribbons, like the 200-day ribbons, that becomes bullish. So another way of looking at this is just looking at it simply. I actually like this chart better. I don't like the fancy Willy Wool stuff. I just like to look at the raw data. And this one here is a raw data, and it shows you the mining difficulty. And you can see it's come down from the high, but it's been much lower. It's declined at a much greater rates in the past. Like in 2021, mid-2021, it declined at a much more rapid pace. So just keep that in mind, that it can go lower. And here's another version of that. This one's interesting. Glassnode did a whole presentation on this in newsletter on mining difficulty, but what they did is they created a regression line of where they thought the all-in estimated production price was, what the production cost was for Bitcoin. But here's the problem with this. I like it because it gives you some information, but it doesn't really explain much. And also this line has been pretty flat. I don't think this represents what the Bitcoin cost of production really is. And they don't explain anything. You see in this red footnote, it says estimated all-in cost of production. They don't explain what that means. There is no definition for that. And I can tell you right now, looking at this cost of $17,223, that is not the all-in cost of production. I can explain to you that later when we talk about bottom-up production cost. Next slide, hash rate. This is the total system hash rate. It's basically the total processing power of all the rigs in the world. And it's been increasing at a steady rate. And this is a log chart. I like to look at log charts. And you can see it's been increasing steadily over time. And if you look at it recently over the last year, it has not decreased. So that tells me that we may have not hit a bottom in terms of problems with miners. Because if miners were going bankrupt and were having a hard time, this hash rate of total processing power would have declined. Because think about it. If miners go bankrupt, what do? They exit the market. They start selling their mines on the secondary market. They start auctioning off those mining rigs. They're not doing that. And here's another example of mining difficulty. This is called the Puell Multiple, created by, of course, David Puell. And what he looks at is the daily coin issuance divided by the moving average of daily coin issuance over the last year. So again, this is daily coin issuance over the 1 year moving average of the value of that coin issuance. So when this declines to the green zone, that means that miners are having a difficult time. And in June, mid-June, I suppose, or around that time, June, July, we did hit a very low value. So this number did become bullish. But just remember, a lot of these charts, especially top-down charts like this one, are based on pricing multiples and prices of Bitcoin. But this is a very good multiple and chart that has worked well in the past. Now this is miner reserve. This reserve of mining companies coincides well with the one we just saw before, the Puell multiple. When miners have problems, what they do is they decrease the amount of reserves of Bitcoin. Why? Why do they do that? Because they get desperate for cash. And so they start selling Bitcoin and their reserves go down. So this did show that miners were having problems in June. Here's another way of looking at miner reserve from Glassnode. As you know, Glassnode likes to aggregate these charts together and show multiple things at the same time. And so you can see in this chart on the lower right, it's saying during June, July, there was a lot of distribution of Bitcoin. And they were trying to get rid of Bitcoin, not because they wanted to, but because they had to. They had to sell Bitcoin and put them on exchanges because they needed the cash from selling Bitcoin to buy more mining rigs and to frankly to survive. So what are the key takeaways? Well, looking at Bitcoin production costs only top down shows that top-down charts from CryptoQuant and Glassnode shows that we're building a bottom. But I'm sorry to say, I don't think we hit a capitulation event where miners are in bad shape or going bankrupt. They came close, but we never reached that point where miners had to sell all their crypto, all their ether, all their Bitcoin, and use cash on their balance sheets to survive. We did not see that. So next time we're going to focus on part two, which is things to consider when looking at production cost. Thank you all for listening, and please go back to our videos and go and look at this one as well as part two and part three of production cost. Thank you all for looking at Lamb's Cryptoverse, and please hit the like button, subscribe button, because if